Todd Horowitz is chief strategist at Bubba Trading. He is in Chicago. What are you expecting today? I hear a lot of people saying, yes, volatility is back, and that's a good thing.
Good morning, Maggie. I expect to see a lot of ups and downs. Right now, even though the markets are lower, based on the VIX index, which is lower as well, I would expect a little bit of a rally this morning. Where we end up is going to be hard to tell, but I would expect to see some major swings. I wouldn't be surprised to see the market up 200 and then down 200. I think this is the kind of trade we're going to have now for the next couple of weeks until they make a decision on which way they're going to go, whether they're going to go back and take out the highs or they're going to actually start the long-awaited correction.
And that is going to make it volatile, and I think that's going to make people nervous. What should we be watching? What market, what area to determine what's going to suggest whether we go higher or lower? Is it interest rates now? Is it bonds that are key?
Well, I think the interest rates are going higher. I think what you really want to watch here, we know rates are going higher. The bond futures are in a bear market now, and they are continuing to slide and fall, and the 10-year is going to get over 3%. But I think what you should watch is the dollar, first of all, because the lower price dollar, which has remained low for quite a while now, is a real key indication of what the interest rates are going to do, because a low dollar, even though the rates are rising for foreign lending, that cheap dollar keeps interest rates low for them. So if the dollar starts to go up, that will create more pressure and take away a lot of the lending power that we have right now. The other thing you want to watch is the volatility index. As I just stated, the VIN index is lower right now, which means that there's still some buyers that may step in here and try to push the markets higher. So usually if you get a down VIX in a down market, the market's going to rally. Just like if you get an up VIX in an up market, the market's going to break. And that's a pretty good indicator for people to watch on the outside.
And we are seeing, in fact, the market come back. We're only down 22 now on the Dow. I don't have the S&P in front of me. I'm sure it's mirroring that. Would you advise people to just stay out of the way until this market figures out what direction it really wants to take? I think it's a little unnerving if you're sitting at home trying to figure this out when you see these swings either way.
I think if you're a true investor, then you should not worry about it. If you're a true investor, you're going to get highs and you're going to get lows, and you just sit there and you just keep investing, and sometimes you pay more, sometimes you pay less. If you're a trader, then obviously you're going to be more involved. But I don't think, and nobody should confuse investing with trading. Let the markets trade. One thing we know as a fact since the inception of the market is they go up 8% year over year. Just not every year, but the average is an 8% growth, which helps you compound your own portfolio. If you try to get too smart and try to time the market, you're going to lose your money and not be in, and then you'll, of course, usually, as they say, very technical term, you're going to puke out at the bottom.
Yeah, we don't want anyone to do that, Todd. That's for sure. We love those technical terms. Todd Horowitz for us. Good luck to you today, Todd. Thanks.
Thank you so much. Have a great day.
Share